How do millionaires build wealth with real estate? There are many benefits owning investment real estate, as mentioned in my video, Why Millionaires Invest in Real Estate. Millionaires build wealth with real estate by avoid paying taxes on the sale of their property. One of the benefits to owning investment real estate is being able to reinvest the proceeds from the sale of your property into another investment property without paying taxes on your capital gain. This allows you to have more money to purchase your new property and increase your cash flow. So, how do you avoid paying capital gain taxes on the sale of your real estate investment? You do this by exercising what is referred to as a 1031 exchange. Let's take a closer look. Hello, my name is Herbert McGurk, a real estate agent for social impact in Beverly Hills, California. Thank you for watching this video. Please feel free to subscribe, comment, or like. What is a 1031 exchange? Whenever you sell an investment property, you will be taxed on the amount that exceeds the price you paid for the property. This is known as your capital gain. Generally, long-term capital gains are subject to substantial taxes. Section 1031 of the Internal Revenue Code states no gain or loss shall be recognized on the exchange of a real property held for productive use, a trade or business, or for investment. If such real property is exchanged solely for real property of like kind, which can be either a productive use in trade, business, or investment. Therefore, as long as you reinvest the amount of your proceeds from the sale of your investment property into like-kind property, you can defer the tax consequences. And you can do this over and over and over again. Why is this important? This is how millionaires build their wealth faster, by keeping their money working for them. So how does a 1031 exchange work? There are specific requirements to qualify for a 1031 exchange. You must reinvest into like-kind property of equal or greater value. What does like-kind property mean? Real estate must be exchanged for real estate. The property must be held for investment or business purposes and not personal use. You cannot use investment property proceeds to invest in personal property. You can identify up to 3 potential properties to acquire within 45 days and close at least one of them in 180 days. You should also identify the maximum number of properties just in case one of the properties falls through. There is also the 200% rule, where you can identify any number of replacement properties if the total value does not exceed 200% of your sold property. You can exercise a 1031 exchange with a fix or flip, because as long as you rent out the property first, but you need to be careful and have a good 1031 facilitator to assist you. What is the benefit of a 1031 exchange? Well, you can increase your cash flow by investing in a higher valued property. Therefore, you have the potential of increasing your cash flow. You can reduce your management obligations by selling several single-family homes and exchanging into a single or fewer properties for easier management. You can also exchange into a triple net lease, which is a lease where the tenant agrees to pay their prorated share of all the expenses associated with the property maintenance, taxes, and insurance, as well as to a predetermined base rental rate. Estate planning. You can combine multiple assets into a single asset or divide them into multiple properties for each heir. Then upon your death, you don't need to pay taxes when you give your assets to your heirs, as long as the property is in a trust at the time. Talk to your tax advisor. Buying a vacation home. You can exchange one of your investment properties into a vacation home as long as you follow a few rules. You must rent your vacation home for 6 months the first year. You can rent these properties out to family members as long as they pay fair market rents. And you must hold the property for at least 24 months. It's important to remember to invest all your net exchange proceeds and acquire a property within the same or greater debt and identify that property within 45 days. When you purchase a replacement property or properties, you must complete your transaction with 180 days which includes the 45 days you've been identifying your property or properties. There are a few variations of the 1031 exchange. There is the normal 1031 exchange when you're swapping property out for a replacement property. There are simultaneous exchange where you sell your investment property and purchase an exchange property while completing the transaction simultaneously. There's a reverse exchange where you can acquire a new property and then sell your original property. Now, this type of exchange is usually more costly because of the complexity associated with it. There's the 1031 improvement exchanges. You can sell your property and identify and acquire a replacement property, as well as make improvements to your new property as part of the 1031 exchange. What if I find a property of lesser value? Any cash that is not used in the exchange is called cash boot. If the mortgage on the replacement property is less than the property being sold, may also be considered cash boot. If you identify a replacement property of lesser value, then you will be taxed on the difference. Note that all the fees associated with a 1031 exchange, such as broker commissions, title insurance, and exchange fees, are included in the list of fees that can be paid by the exchange funds. After the exchange, you will have to report your exchange to the IRS. It's wise to use a qualified 1031 exchange company who will handle your transaction, including IRS reporting. Be sure the exchange facilitator has an errors and omissions and fidelity insurance. The exchange facilitator will hold your proceeds for the purpose of the 1031 exchange. You may also want to consult your financial advisor and real estate agent. I hope you have a better idea of the purpose of a 1031 exchange and how millionaires build their wealth with real estate. Please contact me if you have any further questions. My name is Herbert McGurk, a real estate agent for Social Impact. I give 10% of my commission to a charity of your choice in your name for every transaction we complete. Please feel free to share, subscribe, or comment, or like. I will see you on my next video.